Hi, and welcome to the monthly market update for the Arizona Home Group for July 2022. I'm Sharon Kofini, and we have a special guest today, one of our preferred lenders.
I'm Reagan Wichman with Fairway Independent Mortgage.
So welcome to what a balanced market looks like. The Phoenix metro area has not had a balanced market since early February 2019, and this shift from the seller's market to a balanced market is the fastest it's ever happened in the history of the Phoenix MLS. So what caused the market to shift so quickly? Reagan, why don't you tell us a little bit about that?
So the biggest reason is going to be the quick and significant increase of the mortgage rates.
And how does that affect a buyer's ability to buy a home?
Well, let's use the example of if somebody bought a home for $600,000 and they put down a 20% down payment. A few months ago, if their interest rate was going to be about 3%, their monthly mortgage payment was going to be approximately $2,400. Well, today, if interest rates are closer to 6%, that exact same scenario is going to cost the buyer approximately $3,200 per month, which of course is an $800 a month increase buying the exact same property, the exact same down payment.
Wow, that is quite the increase. So let's take a look at the numbers and see how this change has affected our market. So supply is up 220% just in the last 3.5 months. Contract activity is down 28% just in the last 6 weeks. And price reductions are up 500% since March. Sounds grim, but not all is lost. There are some creative ways we can get around the interest rate increase. Reagan, why don't you tell us about some options?
Well, one of the most popular ways right now that's going to be mutually beneficial for the buyer and the seller is what's called a 2-1 buy down. What a 2-1 buy down is where if the current interest rate was, let's just say 5.8%, a 2-1 buy down for the very first year will drop that interest rate 2 points. So from 5.8 to 3.8. And then the second year, that interest rate is going to be 1 point lower. So from 5.8 to 4.8. And then year 3 through 30 at that point is going to be up at that 5.8% interest rate. One thing to note on a 2-1 buy down is that if interest rates go down in those first 2 years while you're saving money, we can refinance you out of that into a long-term lower interest rate to where you may never see year 3 when that interest rate would get up to that 5.8% mark. So how this is beneficial to the seller and buyer is, price reductions are up, okay? So let's just assume that you were a seller and you were looking to drop your price in order to sell your home. Well, if you were to drop that price by $15,000, that's only going to drop the buyer's mortgage payment by $79 per month. So not that big of a deal. However, if the seller offered a 2-1 buy down, that's going to cost approximately $10,000. But with that reduced interest rate, that buyer's savings on the mortgage payment is going to be closer to $500 per month. So it costs the seller $5,000 less at $10,000 instead of a $15,000 price reduction, and it saved the buyer, more than $400 more per month on the mortgage payment.
So as you can see, there's some options there of what sellers could do in this market to help get their homes sold. But from the buyer side of things, let's think about this and put it in perspective. For the past year, buyers have been making multiple offers on homes. They've been paying above list price and they've been waiving appraisals. That all equated to money out of the buyer's pocket that they had to pay when that appraisal came in low, which many did. And that money was just basically them overpaying for a house. Now, a buyer can also have the option of buying their own rate down. So instead of taking 10, 15, 20, 30 or more $1,000 and just giving it to the seller because that's what offer price you wrote and the house wasn't worth that, they can take that money and buy their rate down. So that's another option that buyers have in this market. So what does this mean for our market moving forward? Well, for sellers, it's back to basics. You are going to need a professional on your side who's going to help you market your home in a way that's going to bring buyers in. We are going to be looking at staging, again, obviously professional photos and video. We're going to have to price correctly for the market. No pie in the sky numbers, name your price anymore. You're going to be doing repairs when we get through that inspection process, and just be willing to negotiate and be realistic about what's happening in the market and make sure that you're hiring a professional to help guide you through this process. And for buyers, well, this is what you've been waiting for. Now we have a lot more choices on the market, so you have more homes to choose from. You don't have to make a decision in 5 seconds. You might be able to actually sleep on it, and you obviously are going to have more power to negotiate and get some of the things back that we were giving away for the past year and a half. So in closing, thank you so much, Reagan, for joining us today. If you have any questions about lending, feel free to reach out to him, and be sure to like, subscribe, and turn on your notifications for our YouTube channel. That way you can get all of the latest information on the market and our updates and lifestyle videos. Thanks for joining us today. Bye.